and welcome to World Financial Planning Day. I'm Noel May, the CEO of Financial Planning Standards Board, the nonprofit standard-setting body for the global financial planning profession. 4 years ago, FPSB partnered with the International Organization of Securities Commissions, or IOSCO, to launch World Financial Planning Day as a complement to World Investor Week. Many of you have supported World Financial Planning Day every year since, and you've done that through education programs and events that showcase financial planning and the value of working with a competent and ethical financial planner who puts clients' interest first. Thank you all for your support. I also want to welcome and thank those of you who are joining our global awareness building effort for the first time this year. And what a year this has been, as we find ourselves close to having spent the entire time enduring the COVID-19 pandemic. Through the pandemic, we've become united as a global community like never before, living through our shared experience of sheltering in place, of juggling new approaches to being at work, of distancing ourselves from many while deepening our bonds with a few. At times like this, we get to reflect on who and on what matters most to us, and to be grateful for all of the professionals who step forward on our behalf, whether that's essential workers or policymakers or healthcare professionals and frontline workers, or the financial planning professionals who have stepped forward to make sure that we are keeping our finances in hand and keeping our future plans on track. The theme we adopted for World Financial Planning Day this year was in response to the unprecedented situation brought on by COVID-19. Our theme is Live Your Today, Plan Your Tomorrow. We adopted this theme to recognize that right now, your clients and potential clients are feeling a lot of stress and may need to think more near term and make tactical financial decisions to adjust to COVID. It's very easy right now for people to feel overwhelmed, responding and reacting to what's going on. The important thing for us to do is to make sure that the public knows they are not alone. They have 190,000 certified financial planner professionals around the world who are committed to practicing financial planning at the highest level and to supporting clients to make sound financial decisions. This blend of live your today while planning your tomorrow speaks to the value of financial planning and of having a financial plan. As a certified financial planner professional said to me recently, at times like this, people don't go looking for products. They go looking for advice, and they want that advice from a competent and ethical professional who will put their interests first, a professional like you. Thank you all so much for joining us today on World Financial Planning Day for our live global event. To hear experts from around the world speak about the future of financial planning and how we can adapt to a new normal. We'll kick off today's broadcast with a panel headed by FPSB Board Chairperson Gerhard Meyer, a CFP professional from South Africa, followed by a message from the global FPSB network. And we'll wrap with a panel about client relationships headed by FPSB board member Ana Claudia Akiotumi, a CFP professional from Brazil. I'm already seeing lots of activity on our social channels, which is great. Before I hand it over to our first panel moderator, I encourage each of you joining today to say hi, to comment during the event, to let us know what's on your mind on this important day for the global financial planning profession. And please don't forget to check out the various virtual and live financial planning events being hosted in your territory by visiting our website at worldfpday.org. Okay, joining me now is the moderator for our first panel, FPSB Board Chairperson, Gerhard Meyer. Welcome and good afternoon. How are you doing and how are things in South Africa?
Hi, Noel. It's a great pleasure to be here. I'm doing really, really well. Things are looking up. I'm talking to you from a sunny Cape Town, so very happy to be here. And from my side, on behalf of the board, welcome to everyone tuning in today and listening to our broadcast.
Wonderful. Well, great to hear, Gerhard, and thank you so much for doing this. I'm going to let you introduce your panel in a minute, but before, can you share a flavor of some of the themes you plan to focus on with the panel today?
Yeah, absolutely, Noel. We're joined by three unique individuals whom I'll introduce in a minute. We're going to have a discussion around the perspective of financial planners worldwide as to how the COVID pandemic impacted upon them. We're going to chat specifically around the use of technology in this period, and we're going to have a conversation around how regulators view this at a global level and what they may or may not feel they need to change around regulation going forward subsequent to the pandemic.
Wonderful. Sounds like we're in for a great session, Gerhard. Before I let you get started, Gerhard, I want to let our audience know that if you have a question for one of the panelists, you can go ahead and ask it in the chat. However, with only 50 minutes for today's session, we may not be able to get to your question today, but we will follow up with you after the event. With that, I'll now turn it over to you, Gerhard. Take it away.
Thank you so much, Noel. And again, welcome to all. It's my pleasure today to chair our first panel discussion, which we call COVID-19 and the financial planning profession. Is it a disruptor, a catalyst, or both maybe? I'm joined today by three unique individuals with very unique perspectives. I'd like to introduce them to you now. First, please welcome Dr. David Blanchett, Head of Retirement Research for Morningstar Investment Management in the United States. In addition, he serves as an adjunct professor of wealth management at the American College and as an expert panelist for the Wall Street Journal. David holds both the CFP certification and is also a CFA charter holder. David, thank you so much for joining our panel today.
Good to be here.
Thank you. Next up, please say hello to Ian Pickford, the Head of Financial Planning and Wealth Management at Mazars in the UK. Ian is also a CFP professional and has been with the firm for more than 20 years, advising high net worth individuals and entrepreneurial businesses on building and managing their wealth, investments, pensions, and retirements. Welcome to the panel, Ian.
Hi, everyone.
And then our last panelist today is someone who was very influential in the start of World Financial Planning Day, which Noel referred to earlier. Special welcome to Jose Vasco, Director of the Office of Investor Protection and Assistance at the CVM in Brazil, which is the securities regulator there. Vasco is also in his last year as chairperson of Committee 8 at the International Organization of Securities Commissions, IOSCO. This committee championed World Investor Week, which raises awareness of the importance of investor education and protection, and partnered with FPSB to include World Financial Planning Day in that awareness campaign. Vasco, it's an honor and a pleasure to have you join us.
Thank you very much for having me.
Absolutely. Guys, so with that introduction, thanks again for being with us, and let's start the discussion. I'd like to ask my first question today, if I may, of Ian, please. Ian, as the head of financial planning at Mazars, you work mostly with high net worth individuals and entrepreneurial businesses. What were some of the unique challenges your clients faced as the pandemic began?
Thanks, Gerhard. I guess as a starter, the pandemic is a unique experience in all of our lives, and basically it was uncertainty. Most crises that come along, most people have some experience of them, have no way out, have seen a way out of it. This was, a completely unique experience, and general uncertainty was the big issue, I think, but particularly in the early weeks and months of it. I think what we've seen since then is that people have found a way to operate through that, and obviously had to find new ways of operating, new ways of working, new ways of engaging with their clients, new ways of engaging with their staff, some of which, as we'll talk a little later, are probably here to stay. But I think it was. I think the biggest challenge was that it was a complete and utter change from the norm, and a complete and utter shock to. One day I was able to do this, the next day I'm not able to do this, and I guess the other thing is it was an invisible enemy. We weren't faced with something we could see or feel or hear. It was just an invisible enemy that was very hard to comprehend. I always remember driving home probably the last day I went to the office and thinking, I can't see this thing. Where is it? And I think that's the thing that was faced by most people at the time.
Absolutely. Thank you, Ian. That's very insightful opening remarks. David, from your perspective, looking at how people look at retirement in the space you work in around the world, what are some of the trends you've seen as to how people may have changed their perspective on retirement planning over the last few months?
Sure. So, I mean, it's obviously different in global markets, but one thing we've seen in the U.S. is that people are retiring before they were planning on doing so. I think that there's always some uncertainty around when you're going to retire, and this creates a really unique environment because not only do we have layoffs in a variety of sectors, we've also got a situation where older workers might not be comfortable going back to work, and it's not clear when we'll get back to normal on that, but that's one thing. Another thing we've seen is a decrease in the demand for annuities in the United States. The second quarter of 2020 was one of the lowest sales in the last 14 years. I think part of that is because people are afraid, but part of that too is just because of where rates are. And obviously, a question we have moving forward is, what does the investment outlook look like for retirees? Because if returns remain low for a long time, it really has a significant impact on how much you need to retire and how much you can spend in retirement.
Absolutely, that's very interesting. I've seen some similar trends in other parts of the world. Let's test quickly how the regulators think about this. So HOSCO sits and has a look at all of this. So Jose, from your perspective, I understand, and you're based in Brazil, that COVID-19 has had a fairly severe impact on your country. I've read somewhere that the economy there is predicted to shrink by about 5% this year. I imagine the regulators must have some plans in place to deal with potential economic collapse or other outcomes. How did the regulatory community in Brazil react, or how is it still reacting to the pandemic?
Thank you for the question. Yes, indeed, the country was severely impacted by COVID-19, as I think everyone is aware of that. The death toll is really high and is still rising. We're still in the middle of the first wave. But despite of these conditions, the Brazilian government actually implemented a very strong policy response to COVID, providing support for families, more than $120 to informal sector workers or unemployed members of their families, additional salaries for retirees, also free energy supply for very poor people, and suspended energy supply cuts due to non-payment for 90 days. Conditional cash transfers, programs like Bolsa Familia were reinforced. So the government is really putting a lot of efforts to provide, to support families. And so despite these difficulties that we are facing and the economic conditions are not good, we are not seeing any economic collapse. Yes, for the future, there was some policy responses for regulators initially to support market participants, their stress, and perhaps provide some flexibility for some obligations. And in terms of a plan for recovery, the federal government announced an economic recovery plan, post-COVID plan, that considers a lot of investments. And we, as regulators, we are working together to make sustainable finance. It's interesting, but that's exactly what we are doing to be strengthening in Brazil. We are discussing that with foreign investors, and we have a large financial effort here, a financial innovation lab with more than 200 organizations that are working on new projects, pilot projects, or new financial instruments to help to pave the way for a further development. Brazil has a huge gap on finance infrastructure. We need $1.2 trillion until 2040, with more than 100 million Brazilians without access to sanitation, 35 million Brazilians without access to even to clean water. So the challenges were huge, and private sector needs to play a role. So our role here as a regulator, I think, can be considered as also as something that ESMA mentioned last year when they reported that financial regulators now can be considered also as innovation facilitators. So we launched this lab. We are working with the public, the other ministries, other agencies, the central bank, everyone on the same table to find solutions for these huge challenges. There was no other way out of this crisis, and that's exactly what we're trying to implement.
Awesome, thank you, Jose. Absolutely, it's definitely a time for collaboration between different entities to work together to assist. Ian, if I may come back to you, we spoke of the invisible enemy that sort of arrived a day after we were told about it. What sort of plans did Mazars have for operating during a crisis like this? So was it something you had in place? Were you able to sort of easily go to backup plans and work from home? Or was it something that you had to sort of resolve on the fly?
We're very fortunate. Mazars is an international. It's one of the largest international accounting and advisory groups in the world, and we had an office in Wuhan. So the epicenter of where the epicenter of the pandemic struck, we actually had an office there that was shut down in December. So and fortunately, or unfortunately, but fortunately in terms of planning terms, there was a plan around the world, around the various offices or various countries around the world as the pandemic struck. And during that period, in the UK, we locked down in the middle of March. France had locked down 3 weeks before that. Italy a month, 3 weeks before that, etc. And the firm had developed plans all the way through this, and they were rolled out across all the countries. And ironically, the day that they locked down in the UK, the next day we were due to have half the office in and half the office out, and then the following day half the office in and half the office out. So everyone was out that day, and we were fortunately ready to go. So everybody was able to operate the next day with computers, teams working, etc. Took 2 or 3 days to actually, get everyone optimized and working in the right way. But as a business, we were able to it was almost seamless. And what I would say is I'd like to thank our tech guys, because normally they are the brunt of everybody's ire in terms of how we operate. But I have to say they did a fantastic job in making sure that everybody was able to function. And within 2 to 3, I think within 3 weeks, everybody had double screens at home delivered, etc. So there was a real plan, can I just congratulate our firm on behalf of our firm? I want to congratulate them. They won't hear this, but if you see anybody, just say thanks. But they did a great job.
I'm very glad to hear that. That sounds like an awesome plan you had in place. So as we sort of moved into this technology world, where all of us learned about video conferencing and webinars and those things, if I go to David, and David, from your perspective, looking around the US and elsewhere, how do you think the competitive landscape will change as a result of the pandemic?
Yeah, I'm not curious. One thing that I'm involved with in the US is a robo-advisor that exists within our defined contribution plans. And I'm sure that a lot of us now are doing a lot more meetings online via Zoom or other channels. And I'm curious, if this will change our perception or demand for advisory services. I think in the past, there really has been a focus on in-person meetings, in-person relationships. Well, are people going to be more open to working with someone that maybe is based 1,000 miles away, or larger firms? And so I'm just curious, longer term, now that we're kind of used to this new method of communication, will this change demand for advisors, where maybe in the past you had to work with someone who was local, but now you can open up a much wider net across your entire country and find the advisor that you think kind of best matches your unique goals or needs?
Absolutely. It's going to be absolutely fascinating watching it, and fascinating, and we'll get to it, watching what parts of what we change to we retain as we come out of the pandemic. I agree with you. Jose, if I may come back to you, we spoke briefly now about sort of how things are going in Brazil and how the different regulatory entities and government entities are working together. I want to benefit from the fact that you're involved with IOSCO and ask you a sort of global question. So you're part of IOSCO, which consists of securities regulators around the world. What have the discussions been like among regulators at the global level during the pandemic?
IOSCO bought since the very start of the spread of lockdown measures and social distance measures across the globe in March. The board decided to hold a lot of electronic meetings weekly and discuss a coordinated response. So that was very useful to provide us with an updated overview of the measures in different countries and how this has been affecting, how the countries were responding to these to those challenges. Was interesting to see that in many areas there are some similarities in the challenges that we're facing, and to learn with the other jurisdictions. Some of those jurisdictions enter in lockdown in February, so they have already some experience. So there are a lot of actions by IOSCO members. Those measures were taken by those regulators related to short selling and volatility controls. Also, some measures to enforce business continuity plans. And also, and I think regarding annual general meetings, there were a lot of decisions that were providing flexibility to those meetings be held electronically in electronic format, and also a very strong response from some regulators to combat scams and frauds that were actually, there was an explosion of scams and financial fraud. In terms of asset management industry, there were no major concerns. I think the infrastructures and the regulation played well. The funding industry has been resilient, so there were no serious concerns about that. We have some as my committee, as the committee that is responsible for retail investors, we have some concerns about investors' behavior during the pandemic, because surprisingly, the behavior that we are seeing in different markets, it's not what we were expecting. I can mention Brazil. In 15 days in March, the second half of March, 220,000 new investors moved their financial reserves to their investments to the stock exchange. So we deal with a lot of circuit breakers, and retail investors was the record in terms of new investors. And 4 years ago, we had 500 investors, retail investors in the stock exchange. And last week, we reached 3 million investors, and people think that we may reach 5.5 million investors, perhaps by the beginning of next year. So this was unexpected. We saw that this happening in other countries also, not necessarily with new investors, but sometimes people trading much more. Some people say, oh, because we are all in lockdown, so we are having a virtual life, an electronic life, so people are deciding to trade. But I think there are also other explanations, and we need to consider the role of digital influencers, YouTubers, and also the new platforms that make investments easier and to make a decision to invest. So I think that we may take a look on that and have an explanation that might be helpful for the next crisis. There was an article published by Foreign Affairs that reviewed that, was saying that we have a pandemic, a disease every 30 years. So we need to plan for the future. This might happen again. And so we need to learn with the lessons that we are learning now.
That's very interesting. Thank you, Jose. Some interesting investor behavior that you saw that was completely unexpected from your perspective. Maybe, Ian, if we can come back to you sort of on that note, you spoke about how your IT guys helped and guys had screens come in and technology became useful. Just thinking about the investor behavior or client behavior that Jose just spoke about, how did your communications with clients change as the outbreak progressed, and what's it like now?
I think when the pandemic first hit and lockdown was first a real issue, I think most people were sort of on tenterhooks about how am I going to communicate with anyone. I'm used to knocking on someone's door, sitting down, having a coffee with them, and actually I think what became really has become really apparent. I think the pandemic has been a catalyst for the acceleration of change in the way we communicate and the way we do business. And I think David touched on it earlier about, you know, you don't have to be close to someone to go or geographically close to someone to do business with them. And I think that realization has increased with clients over time. And I think what's now happened, what was a phone call is now a Teams call or a Zoom call, which is much more productive. It's a better conversation because you actually see the person. Yes, you miss the third dimension of actually being in the same room with them, but actually, I think the communication with clients on a one-to-one basis has probably got better, and we've probably never collaborated as much. I think in terms of communications, I mean, when the pandemic first hit, as in the UK, as was probably all around the world, different measures were put in place by governments, different organisations put out discounts, etc. I know, for example, in the UK, you got Sky Sports for nothing until they started showing, you know. So we put out a whole list. The first thing we did is we sent to every single client, not only of our financial planning and wealth management clients, but every client we had in the UK from a Mazars perspective, a complete breakdown of all the things that you can do as an individual that's going to make your life better in this current pandemic, which went down really well, because it was little things like, you know, for example, you know, how to suspend your Sky Sports subscription and still get to watch it, and it was all things like that that people, you know, probably didn't see. What we've learned from this is that rather than doing face-to-face seminars, we're now doing webinars, and we're actually getting more people at webinars, and we're getting a better uptake off the back of it. Where we are putting together themed events, which again, through a webinar, you engage more people, because people can either watch the webinar when they want, but also they don't have to travel to where they used to have to travel to an event. They now don't. They can fit it into it's just the time slot involved. Bit like this, really. And also, I think, you know, the role of digital is going to play a bigger part as we move forward in terms of marketing. So where once you would have gone and seen a client, now you do a Teams meeting. How do you attract that client? You need to be much more au fait with the how to interact and engage digitally. That's going to be much more important. And some of that is never going to go away. I think we've reached a point where why would you go back the other way? You know, we need to, you know, there's some really gems in here that are going to help businesses develop and amplify better engagement with their clients.
Thank you. I've heard very similar comments from advisors from around the CFP world, saying that there's some really good stuff in the pandemic way of working that they'd like to retain. Yeah. So people talk a lot about not commuting up and down. People talk a lot about the ability to speak to advisors 2 hours drive away, things like that. So that's very.
I don't miss getting up at 5:30 in the morning to go into London, I can tell you now.
If I may ask just a quick follow-on, Ian. So I've spoken to a lot of guys about the good stuff that's going to stay and how they've changed things. Is there anything that you guys tried on your side that just didn't work out? That you said, thanks, we've tried that now, but not again?
Not really. I think one of the things we have to get around, and I think one of the challenges, there's a lot of advisors in the UK who can't get into the operating in this digital virtual world. They were used to spend. I mean, I've heard the phrase, "What am I going to do with my thinking time in the car?" You know, I don't have that anymore. You know, well, that's gone, and I think there's going to be a massive shift. I think, in particular, dealing with existing clients, that can be done much more efficiently now than it ever has been. And I think one of the things I think we have, you know, I think there was a lot of technology, and is a lot of technology that was in businesses before this pandemic hit, and we probably used 10% of it. We now need what we found is we had a lot of this kit, we just never optimized it. We never turned it into something that was useful and actually made us more efficient, mainly because it was difficult, mainly because that's not what I'm used to doing, maybe because, well, the last thing I did was the best thing in the world. You know, you can't change that. And what the pandemic did was it's just wiped that away and said, well, if I want to engage, if I want to talk with a client, I have to do it this way. I've got no other choice. I can't go and knock on their door and go and see them. I could sit in their garden, but it's raining and I don't really want to. It's the pandemic forced us to change. And I think a lot of that, people are realizing a lot of that change is good and beneficial. Even clients like it because, if you're insisting they come to your office, that's something out of their day. You're not imposing on their time and their day. I mean, I even had one client say to me, "But thank God we're only going to do a video call because I don't have to tidy the house up before you come. I can just put it into a room and hide you off to the corner, and that's great because it's made my life easier as well." But so I think there's lots here that why would we change it? Why would we go back? The providers are allowing us to do things that we wouldn't do before. Electronic signatures and the like are going to make our lives easier. That technology was always there, but it was never used. We're now forced to use it. If you want to do business, you've got to do it that way.
That's very interesting. Now, I think it counts in all walks of life, though. So I've heard some planners say to me, "I'm so tired. I haven't taken holiday because I don't want a holiday in my kitchen. I spend my whole day in my study. That's not a great move. I want to go to France." I think that adjustment across all walks of life is so very, very important. That's so spot on. David, if I might come back to you, you spoke about the work that you do sort of in the retirement space and the robo-advisor space that you do. And I know you've done some work looking at you mentioned some of it earlier, looking at the behavior of 401k participants in the US. Is there anything surprising that you noticed that's now different? Jose mentioned a few things in Brazil. Anything that you noticed that's worth discussing?
Sure. So this is a global call. 401k is a terrible name. It's our defined contribution scheme in the US. We named it after a tax code. It's kind of ridiculous. So really good news. And so what I've spent some time doing is looking at how investors in our defined contribution plans have responded to market volatility. And, for the most part, most people didn't do anything. But one thing that I thought was really reassuring was that investors that were in a professionally managed solution, traded about 20% as often, or left their solution as those who were self-directing. And for me, what this really distresses is that if someone is working with a professional that they trust to manage their investments, they're not going to react to the market as likely. I mean, everyone does things you can't control, but I think that we didn't necessarily see a whole lot of this back in the global financial crisis because we didn't have a lot of usage of these solutions inside defined contribution plans. Now that we do, though, I think it's radically improved how investors respond to these events. They don't do anything, which I would argue is the right thing to do. And so if anything, what this suggests from my perspective is that getting investors, especially the average investor, to delegate that responsibility for someone else to manage their portfolio is going to lead to better outcomes over the long haul for the vast majority of people.
Okay, that's very interesting. We've seen similar sort of research come out despite there being a pandemic. So it's very interesting to see that you find the same behavior continuing now. That's really heartening from a CFP professional perspective. Jose, if I can come back to you quickly. We've spoken about Brazilian regulation, international global regulation views. And we've partnered with you as FPSB to get to the day that we have now, partnering with your Investor Week. Going forward, during the pandemic's remainder and post that, how can the financial planning community work with the regulators to ensure clients or investors remain protected?
Thank you for this question. I've been the director of this Office of Investor Protection for the last 15 years. I joined CVM 22 years ago. And during my journey here, I was one of the first lessons that I learned was that we're not effective alone. So there is this old saying that you need a village to raise a child, and education and information. And I know it's but I do believe in that saying that you need a lot of people. So when we started working here in 2005. As the director, we had this program on financial education since 1998, but we are not very effective. So we are impacting very little people, not so many people. So we decided to partner with the self-regulatory organizations. And so by this partnership approach, of course, not partnering with the financial firms, initially the brokers, but with the associations. We managed to change the landscape in Brazil. We launched the National Strategy for Financial Education, was led by the securities regulator, which is not the biggest regulator in Brazil, it's the central bank. And now we have a National Strategy for Financial Education. We have a plan for financial education in capital markets. So over the last 15 years, partnerships were clearly a very effective response for a regulator when you have governance, when you have the objectives, and you choose the right partners. So the law that creates CVM, creates CVM in 1976, requires that we foster savings in Brazil. So it's an unusual mandate for a regulator, promote savings, saving behavior among Brazilians, and we knew that for having more investors, we need more savers. So we need to change that, the culture. And what my first reaction, I think 9 years ago, was to partner with the local branch of FPSB, because I know I'm not an expert on financial planning. These guys know that. So why I'm going to reinvent the wheel? So we approached, the local branch of financial planner. We set up a partnership, and since then, all the messages, all the initiatives that we're trying to foster financial planning, saving, behaviors are designed and discussed with the financial planning community. So when I took over the position of chair of IOSCO Policy Committee, my approach my experience was also suggesting we need to do more in partnership. So then you have World Investor Week, then you have a financial planning day. I knew that in the 30s, because of the crisis, there was the idea of creating a savings day, a global. It still exists, but it's not well known. So I think we have an opportunity here to launch this day. I suggest that to Noel. He agreed, and so I think we have this incredible partnership. So just to make a comment, my final comment on this. Since 2014, we have reorganized Brazilian Money Week, and financial planners play a very active role. But then we had COVID. So how you can, work with the people? So if everybody's locking home. So what we launched this week, actually yesterday, was a new app that is available on the website of the local association of financial planners. That it's kind of apologize by my French, but it's how I can explain. It's a kind of a financial Tinder. I don't know if you know that app, Tinder. I don't know, but I know it exists, and it provides a match between a financial consumer that is in a vulnerable condition and a financial planner. So it works really well. So you fill out your profile, what you want, and 200 financial planners volunteer to provide assistance in this pilot project. And what I did, I also suggested, and they agreed, to include a CVM avatar. So also some civil servants from CVM are answering questions from the population. So it's a pilot project, and perhaps this will change the way we do, large scale financial planning activities through the for the population, because we can do this now in an electronic format. We can reach Brazilians in these big countries, a continent, and I think it's a very unexpected, but I think it's a good outcome of this terrible crisis.
It's very interesting. Thank you. Thank you for sharing the idea of financial Tinder. I'm sure that's something that other countries can look at and potentially copy. We definitely appreciate the relationship between FPSB and your IOSCO committee. We think it works very, very well to work together. And we got together without a Tinder to match professional bodies and regulators. So I think that's a really great idea to match people up. Thank you. That's very interesting. Ian, if I may come back to you briefly, when we prepped for this call, one of our colleagues suggested that in some countries we are prepping for a second wave of the pandemic. And I think you put up your hand and pointed out that the UK is already in that second wave. So depending on where people are in the world, it's a first wave, it's a waiting for second, it's in the second. Have you seen a change in how people feel about it now than they did at the beginning, and how clients behave now versus at the beginning of the pandemic?
I think when we had the first wave or the first lockdown, to many it was novel. It was something new. We were going into summer here in the UK. The nights were getting longer. People were actually could exercise in the evening. Weather was getting better, and it was novel, and people found it a different way and a new experience. When about 2 or 3 weeks ago, when it was obvious that the UK is now going back into a second wave, the sort of mood was slightly different, and the mood was very much, we're in a situation now where the nights are getting shorter, it's getting darker earlier, it's getting colder. That ability to get away from the four walls of the house and get outside is limited. But I think what has happened is that we're learning how to live with this, and I think there's a realization that actually a lot of what we've done in this lockdown period isn't going to go away, and will become the new norm. It would be nice to go out every now and again and go and meet colleagues, etc. But I think that will come, because these things won't last forever. This is there's a finite time to this, I believe. But I think it's more of the same, but I think we're now approaching it with a knowledge of what it's going to be like, which actually makes it easier to cope with. And if I go back to what I said right in the first question you asked me, we now where we entered it with uncertainty, there is a certain amount of certainty around some of the things that are happening now, which actually makes it easier for many people to cope with. I still get that it would be nice to go on holiday, it would be nice to go and meet clients, it would be nice to do all those things, but a lot of what we've done now is going to stay, and actually it's going to become the new norm, and I think people are getting used to that.
Very interesting to watch the behavior. You're so right. David, maybe I can ask you a sort of a follow-on question to what Ian just spoke about from your perspective in the US. We've heard from all three of you today that you think there are some changes that will remain. What do you think will remain? And maybe just in general, how are people in the US responding, not apropos only to investments and the like, but just in general? And maybe it differs across the US being such a large country.
Yeah, I mean, I think this maybe just piggybacks on something that Ian said. I mean, the session title is this disruptor or catalyst, and change is really hard. People like to do what they've been doing for a long time, and what this I think causes everyone to do is to reevaluate what they were doing in a more digital way, right? So this, I mean, if you have to send your entire workforce home, how are you still an effective company? How do you maintain company culture? How do you get things done remotely? And so I'd like to think that there'll be a lot of good things that come out of this in terms of the planning profession. As the earlier comments, I think that if anything, I want everyone to have a financial advisor, but I don't know that that's cost effective or easy today. I think it can be if we create different avenues for individuals to receive advice. And so one thing that might matter more in the future is digital marketing, is your presence, because in the past maybe you could survive based upon having this local presence, but in the future maybe it requires much more than that. So I think that adapting to this new technology, having the credentials and education, it could be a whole new world if all of a sudden everyone competes against each other versus it being more kind of a local game, which is how it's been in the past. So
yeah, very interesting.
Gerhard, can I just add something to that? Because I think a really important point. I think not only is it the digital marketing, it's also data. Data is so key moving forward, and I think we underestimate how much power we have in the data, and getting our data right and clean and using it will those firms that do that will have an advantage over a number of other firms.
I think that's absolutely critical. I think cleaning the data is important, but then also just using it for what you have is so important. David, do you have anything to add to that? Do you see any changes in that regard from a data perspective?
Well, I mean, I'm like a data guy. I do research all the time. But I mean, for me, it's more of this is a disruptor, but it's also just this opportunity. I think that you know how you as an advisor reach clients can fundamentally change. I think that if you were to tell clients a year ago, hey, we're going to start doing a lot of these online meetings and we'll see how that goes, a lot of them would say no. But a lot of them now, they've had to do it for work. Like this was forced upon them, and they're going to say, hey, I kind of like that. You know, I mean, Ian's point about like, I don't have to clean the house anymore. Like all of a sudden, it actually can be more convenient for both parties. They don't have to go somewhere. You don't have to go somewhere. And so I think that it really can change the perception of what you want in a relationship with an advisor. And if you can offer that to clients, you can be a lot more competitive all of a sudden.
No, that's a very interesting point. One can list that on that financial advisor Tinder that Jose spoke about, whether you use Zoom, Microsoft Teams, or which one you use, it can attract the right clients. But I would say maybe to switch back to you on that note, our colleagues are telling us that they're seeing a definite sort of move towards video conferencing, webinars, and the like, into fintech as a whole. And I know that for some time, our HOSCO regulators around the world have scratched their heads and said, should we be regulating fintech more, less, leave it alone? I've seen some attempts in different jurisdictions to do that. What's your take? Do you think there'll be an increase now, as our colleagues have said, in the use of fintech? And from a regulator's perspective, is that a good thing or a bad thing, or is it neutral?
I think there's a potential here for really digital transformation of the market infrastructure. I do believe, I do agree with ESMA, the European Securities Market Authority, that published last year a report on a new role for financial regulators, which they should also be innovation facilitators. So you have this list of sandboxes, financial innovation hubs in UK, in United States, in Canada, in Australia. We also launched our own facilities here, a sandbox, our innovation hub, our financial innovation lab. So what we saw here is that there was some difficulties for small and medium enterprises for accessing funds, credit loans, the banks, the banking system, and we add extra flexibility to crowdfunding platforms so they could be more effective. One thing that's my opinion that the pandemics will change is that we were all talking about green finance, and because of COVID, the social impact is becoming even more important. Brazil as a country, we have an insurance of billions of dollars by the treasurer, and the fact that bonds were mentioned, that this money is going directly to fund families, to support, the fund these programs that will support families during COVID, was something that investors really paid attention to. So I do think that for impact investing, fintech may be a response to mainstream need, especially if the new generation of investors, millennials, Z generation, they are taking. We have some research on that. They are taking into account those ESG factors when they are making investment decisions. So it's a cultural change that I think it's going to stay, and fintech can make it easier. But of course, there are some concerns about investor protection. Yesterday, we as part of our initiatives at this Financial Innovation Lab, we have a group that is designing a proof of concept for security tokens in Brazil. Are we going to, and it's a very interesting experience, and I think hopefully next year we'll have more security tokens in Brazil that would support small and medium enterprises.
Very interesting. Thank you. Thank you. Ian, if I can switch back to you quickly. We've spoken about a number of changes. Our clients have reacted. We've spoken about hoping some things will maybe not disappear and will stay in our life as it is. Are there any specific opportunities that you see at this point to strengthen your ability to provide financial planning to clients? And maybe also just touch on what pandemic changes do you hope will become permanent? I know we've spoken about a few before, sort of as a wrap up on that point?
I think the interaction between providers and the ability to transact business virtually is got to be key moving forward. I mean, what we found what I've found in the UK, others may have found it different. The smaller providers have been much more flexible and adaptable. The larger providers have been slower to change. And I think the ability to deal with people in an efficient way has to be on the agenda of all businesses, because I think they'll start to lose market share if they don't. I think there's a warning out to them, but whether they heed that or not, I don't know. I think the servicing of clients is going to change. The way we service our existing clients will change. I think why would we have all those face-to-face meetings and 2-hour drives when we can do this? I also think the acquisition of certain clients won't change. I think when you're trying to meet new clients, the actual face-to-face meeting is probably the most effective. However, I think if this goes on longer, people will get more used to operating like this. So there might be a slight change there. I think the use and optimization of technology is going to accelerate. I mean, we've put lots of change into our business and on how we interact with a client, how we document, how we make our processes more efficient, getting more to you enter data once and only enter it once. And so I think businesses need to take that on, because when we're seeing compression in the value chain, where we're seeing the challenge of robo-advisors, we have to find ways of doing what we do more efficiently. And a lot of businesses particularly have operated in a very inefficient way. And I think those changes are here to stay.
Thank you very much, Ian. David, maybe just quickly some final words from your side. Similar question: is there anything that you think will or should stay with us and become permanent?
Yeah, I mean, I would probably, Ian and I have been in fierce agreement for most of this webinar, so I would agree with most of his points. I mean, the one thing that again excites me is this idea that people will be open to new ways of interacting with advisors that they weren't before. I mean, I think that there are some individuals that will always want that face-to-face, come to your home and sit down. But to me, the idea that people are more willing to kind of receive advice and get guidance in different formats, that to me is just really exciting. I think that there'll be a large group of the population that maybe wouldn't have before, that maybe now is interested because they have an easy way to get that. So I hope that we have more channels in the future to help people get advice that want to get it.
Excellent, thank you, David. Jose, any last words from you on developments in Brazil? Anything that you foresee happening in the next few months? Anything the regulator would like to see stay?
I think some of the measures that were implemented will stay. The legislation in Brazil was amended to allow for annual meetings in an electronic format. I think this is definitely going to stay. Some of the measures that we implemented provide extra flexibility. Also, I think they proved that we're correct. I have an opinion here, and I'm not sure if this is going to happen, but if COVID stays with us for a while, the second or third waves, I don't know, or the vaccine does not work, and I think, at least for regulators, we cannot now do on-site inspections. So that's a reality. So some of the cases that we have here depend on on-site inspections. So I think a logical consequence of this restriction perhaps would be regulators changing the regulation to make everything in electronic format, something that they can access using their computers. So I see a boom for RegTech and also some algorithms that will help supervisors to do their job without visiting, the firms. That's my guess.
Wow, thank you very much, Jose. Gentlemen, I can chat to you for the rest of the day. This is really interesting, but we've got another panel waiting in the wings, as I understand it. So I'm going to have to wrap up the conversation on that. I'd like to thank each of you for a very insightful discussion. Thank you so much, and for helping us examine the impact of COVID-19 on the future of the financial planning and financial service industry. Well done and appreciated from FPSB's perspective. So right now, let me send it back to FPSB CEO Noel May for a look at what's coming up next on our broadcast. Noel?
Thank you, Gerhard, and thanks so much to the members of our first panel for an enlightening conversation on the future of our profession. Our panel has given me, and I'm sure all of you joining today, plenty of food for thought in terms of integrating technology and rethinking how you practice and deliver advice in this new normal. And thanks, Vasco, for those tips on the Financial Planner Tinder app. The panel discussion has also highlighted that we are a resilient and necessary global community, and that we are ready to rethink our future and emerge from COVID-19 stronger than ever. Again, to our great global certified financial planner professional community joining us today, welcome. We currently have more than 190,000 CFP professionals around the world, and that number continues to grow each year. FPSB's mission is to establish, promote, and enforce worldwide standards for the financial planning profession. And our vision is to have CFP certification recognized as a symbol of excellence for those offering professional financial advice and financial planning, supported by our global network of financial planning professional bodies and partners in 27 countries and territories around the world. This World Financial Planning Day, I'd like to share a greeting from these organizations that work tirelessly on your behalf to promote to the public the value of financial planning, the value of having a financial plan, and the value of working with a competent and ethical financial planner, such as a CFP professional. Let's take a look.
Hello from Sydney and the Financial Planning Association of Australia.
Hello, 大家好. Greetings from FPSB China.
Hi, this is Kevin Keller from CFP Board in the United States.
皆さんこんにちは. Greetings from Japan Association for Financial Planners.
Good morning. Goeiemorgen. Dumela from a sunny South Africa. Greetings from the Financial Planning Institute of Southern Africa, in short, the FPI.
Hello, bonjour, and greetings from FP Canada. Today on World Financial Planning Day,
we come together as a global profession
to raise awareness about the value of financial planning,
to encourage building a solid financial plan,
so that everyone, everywhere, can achieve their financial goals.
Today is the perfect time to reflect on life goals, talk about money with loved ones and children, invest in the market, and invest in the future.
It all starts with financial literacy.
And the support from a global community of CFP professionals
who are competent, ethical, and put their clients' interests first.
Today, we come together to help people all over the world
to live their today and plan their tomorrow.
活出您的今日，筹备您的明天。
Vivez votre présent, planifiez, faites des plans pour votre futur.
今日生き、明日に向けてプランしましょう。
Im Heute leben, das Morgen planen.
Happy World Financial Planning Day.
How great is that? I love this showcase of how truly global the financial planning profession and CFP certification program is. Thanks to our FPSB affiliates around the world for creating that inspiring message. We're grateful to have you as our long-term partners and for your support with today's broadcast. Our next session is all about delivering from a distance, serving client needs in a global pandemic. We know that COVID-19 is causing high level of stress for everyone, and that empathy, communication, and emotional support have proven to be a very important part of client relationships. Our next panel will share insights on how client service will continue to change in the new normal. The moderator of our panel, FPSB board member Ana Claudia Akiotumi, hosts our next session from Brazil. Let me hand it over now to Ana Claudia.
Thank you, Noel, and welcome to Delivering from Distance, Serving Client Needs in a Global Pandemic. I'd like to begin by introducing our panelists. From Singapore, we have Chris Tam, a CFP professional who's also CEO of Provident, a fee-only wealth management firm. Chris has more than 2 decades of experience in wealth management industry and financial planning profession. He's member of Financial Planning Association of Singapore and is a thought leader, frequent speaker in financial planning issues. So welcome, Chris. Thank you for joining us.
Thank you. Thank you very much.
Next, I'd like to introduce Hansi Mehrotra, a CFA shareholder and founder of both the Money Hums and Financial Education Initiative in India, as well as Money Management India, an industry portal. Hansi has more than 20 years of experience in investment research and consulting, and he has been named top voice and power profile by LinkedIn for her posts and videos. Thanks for joining us. Very good to have you here, Hansi.
Thank you. Good to be here.
And last but not the least, for sure, we are honored to have Julie Littlechild, founder and CEO of Absolute Engagement, a Canada-based consulting firm that works with individual advisors, teams, and enterprise to incorporate the voice of the client in their business to drive deeper engagement and growth. Firm's clients are located in US, Canada, and the UK. Julie, thanks so much for being here with us today.
Oh, thank you.
So let's start. Speaking about this global pandemic times is always challenging, and I'd like to start with a very interesting research conducted by Julie's firm about the pandemic in the beginning of the pandemic on the impact of COVID crisis in clients' loyalty. Julie, what did you learn with this research?
Well, we were out talking to investors. This was a North American study that we're referring to in this case. I would say that based on the research we've done elsewhere, the themes are usually quite similar. In what was maybe most important to say is we didn't intend it to be about COVID in any way. We had no idea as we were putting this together. It was very early in 2020. But as it turned out, it was something of a gift for us to be able to be out and talking to investors and trying to assess the impact of what they were experiencing on, in particular, on their expectations, their needs, their relationship with their advisor. And one of the overall trends that we saw was that loyalty was really starting to take a hit. Now, satisfaction has always been strong, loyalty has always been strong, but what we did see is that first of all, in a 12-month period, there was a 10% shift in the increase in the percentage of clients who said they'd thought about changing advisors. And that alone suggested some change. But what I thought was really interesting is when we dug in, we started to separate out the respondents based on literally the day they responded. So across a 2-week period in March, from the first couple of days to the last couple of days, how did that change? And it actually went up as far as 44% of clients saying they'd considered changing. Now, I don't think that many did. I don't think that many will. I don't think it was suggesting people were running for the door. But, at a minimum, it made us just sit back and pause and say, it's interesting how this kind of anxiety and uncertainty actually then manifests itself potentially in declining loyalty across the industry. So there are a lot of findings, but that's definitely something that jumped out for us.
Very good, thank you. And Chris, you work a lot with retired people and near retirement people, and we know that this pandemic affected very much elderly people in general all over the world. So when the pandemic hit Singapore, what did you hear from the clients? What were the emotions? What changed in their minds with the pandemic? We know that across the world, we had different types of concerns, but I think that in relation to elderly people, the concern was even greater, no?
Right. Yeah, thanks very much for that question. Well, I think thankfully for us in Singapore, I think the government actually got control of the situation quite quickly. And we went into a lockdown and everybody were kept back home. So actually, I don't have really exciting stories, which actually is good. Most of the clients are actually okay. They were safe. None of our clients were infected. There were no fatalities amongst our clients. In fact, the fatalities in Singapore is actually quite low. I think now we have about 27 people who unfortunately passed away from the pandemic. So not very much in terms of clients being worried about the pandemic. And thankfully, a lot of our clients have also gone through 2008. And so they were not too worried when the markets took a beating and it started coming down. I think if anything at all, some of them came and actually asked us, how should we respond to this market? Of course, some will ask, what do we see the economy going forward? How is it going to affect the market? But we have quite a number of clients who actually came and asked us, is this the time to put in some spare cash? They have some, what we call dry powder. So they were actually asking us those kind of questions actually.
Very good, thank you. Hansi, it's interesting that you work with a different audience. You work with research and education for money managers and also consumer education platform. And we know also that India, as the case of Brazil, was severely hit by this pandemic. How do you see the concerns of both in the area of education providers for this financial area, as well as the investment managers? What kind of concerns they expressed to you or you felt from them?
Right. Thank you. Thanks for the question. I should clarify that I've been running the Investor Education Initiative for a few years now, but the Research and Education Portal, I am in the process of restarting, so I don't have the luxury of much evidence there. But let me just explain what I see. When the pandemic hit, our Prime Minister was he took it very seriously compared to other leaders around the world, and we went into a lockdown mode. And at that time, India was already slowing down, and we took this very seriously. We thought it was for a few weeks and it'll be over. But as it's dragged on, we've realized how extensive it is. Unfortunately, the India that you see, which is people like me who obviously have a Wi-Fi connection, have a laptop, can speak English, that's one very small part of India. The real India is obviously out there, and people like us can sit here and comment. But fact is, it's the real, what is heartbreaking is when we saw on television and when we step out and we see it, is the people on, like our support staff or the people who produce the agriculture in terms of what food we buy, they had to leave their jobs and migrate back to the villages in India. And that was really heartbreaking to see. I think it's those people that were really affected. Unfortunately, that makes up a good 70% of India's population. So when I sort of say anything for the rest of today's session, it is a very small part of India that I can comment on. Secondly, I have increased the number of investor education webinars almost to, I was at one stage doing 2 a week, now back to 1 a week. Mostly a lot of young people asking for advice. And as optimistic as they are, there's a lot of anecdotal evidence about them wanting to put more money in, as Chris suggested, that they have some dry powder. But I think, again, they are the very privileged few. I've been active on LinkedIn quite a bit. So I follow the LinkedIn Workforce Confidence Index. That's something that they've started. And they've been measuring, every 2 weeks, they've been measuring the confidence of the people, again, on LinkedIn. So again, a relatively privileged sort of class, but they have professionals and they have business owners and they have millennials also on LinkedIn. And they've seen, interestingly, confidence dip, but then it's kind of increased again. So only about 2 weeks ago, they asked me, what do you think explains the confidence increase? And I must say, I was at a loss to explain that really, because I think the pain is yet to come. I think we are yet hitting peak numbers of infections. We are still losing a lot of people on a daily basis. Almost everyone I know knows people who've died. The GDP has since been announced as being down 24%. It's in living memory. Most people don't remember that situation being that bad. So I think we are relatively protected, especially in my field in education and content, even in financial services. Most of my colleagues have been relatively okay, just working from home. But I think that's not the real economy. I think there's a lot more pain to come, and people are bracing themselves. By the way, so the LinkedIn survey, as well as the official kind of numbers that have come out, or not official, but one of the think tank numbers, 6.6 million white-collar workers have lost their jobs in India already. And that's something that is yet to filter down to their financial sort of worries. I think they're running out of their savings. A lot of people have been dipping into their pension savings. That's been publicized as well. So I think the pain is yet to come, I think.
I'd love Hansi and Chris, both of you, because we see a lot on the theoretical side. And one of the things we found in the research this year, we actually created a variant of a confidence index. We called it the self-confidence index. And it was really just 4 statements about how confident they were, how if they felt in control, if they felt clear about their financial future, and so on. And what we found was that even just shrinking that self-confidence gap a little had a significant impact on the business. But and we found it the same for the wealthiest in the sample. Like it didn't matter how much money you had; you were still feeling this level of anxiety. Is that something that you're seeing with clients as well?
And before moving forward, I think it's interesting to connect this comment, Julie. If you can elaborate a little more on you talking about the importance of demonstrating what you call the client leadership, and how this can be useful for financial planners at this moment.
Yeah, I mean, where we went with a lot of the research this year, so the self-confidence index being one of the key drivers. When I mentioned the loyalty issue we saw earlier, we began to dig into that and try to peel back the onion a little and understand what was causing that. And we saw a number of different relationship factors, things you would expect, like confidence in or comfort with level of risk, or confidence in returns, and the kind of thing that frankly I would be shocked if I didn't see during periods of uncertainty. But we focused more on the self-confidence index because it had more to do with how clients were feeling rather than a reaction to an external issue. And we tied that into a lot of the work that we were doing with advisors around demonstrating leadership, because leadership has always, in my mind, and certainly based on the research, been an important role for advisors, but it seemed to become even more important. And part of the way we think advisors demonstrate leadership is by not just reassuring clients, not just by telling them things are going to be okay, but in effect trying to dig into their level of confidence, try to help them uncover, to label, to understand how they're feeling, and work through some of those issues. So, I mean, there are some tactical elements of leadership around communications and so on and so forth, but we really felt one of the big findings was trying to understand at a very granular level how clients were feeling, and hoping and believing that financial planners certainly had the skills to do that.
Yeah, Julie, I just wanted to chime in and yeah, sorry.
You touch base in an interesting point that you have it's important to know how the clients are feeling and how the planners are feeling as well.
Yeah.
And this is something I think very, very important. And I know that Chris, you have this both sides of the concern. So can you tell us a bit more about your experience on this?
Yeah, I wanted to chime in just now, Julie, because I thought what you said was very interesting when you mentioned that, to show leadership by financial planners, it is not just about telling clients not to worry, right? Because probably the worst thing to do is when someone comes to you and they are very afraid of the market, and you tell them, do not worry, of course, and they will say, of course, it's my money, right? It's not your money, and you probably have been this many times, but I am worried. And a lot of times showing leadership is being there and listening to the clients and understand that emotions that are going through their minds, and of course then providing that safe pair of hands to really help them understand what is happening to the markets, and that this is temporary, and as in all crises they will pass, and then leading them in the correct direction. So I think I really agree with that. And back to your question on two sides, I guess you are meaning to say that I have to be worried about the clients as well as the company. As I said, thankfully from the client's perspective, it wasn't that bad. I was actually quite surprised. And perhaps it is because a lot of the clients or my clients have gone through 2008. And 2008 was very bad. And 2008 was a banking crisis. But many of these clients have seen how the markets came back after 2008. So I felt that compared to 2008, relatively speaking, our clients were actually pretty calm. However, what happened was towards the end of last year, the firm actually came out with what we call a crisis management plan. We weren't so smart to expect a pandemic, but it's just that the market has been running for the last 10 years and 85% of our revenue comes from investments. And we thought that, well, if the market takes a beating, not because of the crisis, we should really have a plan to assure clients. So we came out basically with a crisis management plan, and then we activated that plan. And basically that plan is about when the market fell a certain level, say 10%, what are some of the actions we will take, right? If the market comes down by 50, by 20, what are some of the actions we will take? Some of the actions would be like straight off, the advisors will come in at a certain time, get a brief by the head of investments, and then all the advisors have a standard script that they have prepared to WhatsApp to all the clients. The marketing team would have gotten ready a newsletter to be sent out by, say, 10 o'clock in the morning. And then we conducted webinars. We actually, during that period when the markets were, we all remember markets coming down, right down 30% from the peak. And during that period, we were doing like one webinar every week. And of course, for some clients who are a little bit more jittery, we make a personal call. We couldn't meet them, but we can call them, or we can use Zoom and Microsoft Teams to talk to them. So that's on the client side. From the company side, well, we really didn't expect ourselves to go into a lockdown for so long, right? Like what just now Hansi mentioned, right? That initially it's just a few weeks. Nobody expected it to be so long, but then it went on, and it's now like 6 months already. So halfway we realized that this is actually going to be quite permanent, right? And we have been working from home for a few months, and actually what we were concerned about is about how do we keep the firm together? How do we motivate the staff? How do we still keep them inspired to reach what we said we will do in terms of business goals? So very quickly, some of the things that we did was basically we started with getting everybody every Monday for a morning workout session, like a physical training session. We started having daily stand-up meeting just to get everybody to huddle together. Once a week, we'll do things like let's have tea. Basically, it's tea time virtually. And then after a few months, we realized that people were a bit down just being at home. So we send them like handwritten cards. We send lunch. We gave everybody a day off. And basically, we were just telling people that, this is, do not actually let this pandemic wear you down. Still keep your minds, or keep your eyes on the target. And then we started telling people that, well, this is going to be the best year for us. Don't let this pandemic wear you down. And thankfully, up to this point, I think it is actually turning out to be the best year in our entire 19 years of history. So it's interesting, right? Because we never expected it to be like that. But in terms of asset collection and in terms of the P&L, this year has turned out to be actually the best year for us. So yeah, we're just grateful that things have turned out that way.
Very, very good. And you touched on this on being online and using the online tools with your clients, and Hansi, as an influencer in this financial area, also mentioned this. Hansi, can you tell us more about your experience in using all these virtual tools in your work, and how this has been important for you to reach your audience?
Okay, so as part of the Money Hunts thing, reaching sort of retail investors via webinars, Zoom and tools like that have been brilliant. So that's the easy part. I've not been able to make videos, I must say, because my producer couldn't make it to my place. So just recently, last week, I filmed, so hopefully that will go out. But coming back to your earlier question, and I guess now touching the other side, how's it been like for the advisors? Now, I work right now, I'm working with some private banks. So I'm dealing with relationship managers that are advisors to very high net worth and ultra high net worth investors. So it's not to say, so those people have been fine. Okay, so their investors obviously don't really need financial planning. They don't really need hand holding. They're the kind of people who would either be jittery or put more money in. But they wanted to talk to their advisors on a regular basis. And they are open to seeing webinars and stuff, not just on investments, but also on other entertainment type things. So that segment has been okay. The worrying bit is actually the middle. Okay, so I've talked about the real India. I've talked about the rich India. The middle India is where I find it the most worrying. Partly one, not everyone can afford a financial advisor. There aren't enough qualified financial advisors to go around, one. Two, I think financial advisors, the barriers to entry, or rather the entry barrier to becoming a financial advisor is relatively low. So we're talking about sort of this episode where they need psychological handholding, right? Your clients need that comfort. And yet financial advisors have not really been trained in that. Even if they're CFP, they might have studied a little bit more, but the ones that are not CFP, which is the majority of advisors in India, their knowledge level is very low, and their whole value proposition is tied to investments. So if people are losing their jobs or worried about losing their jobs, they can't possibly be adding more money, right? So they're sort of definitely stopping all what they called SIPs, which is systematic investment plans, or regular savings plans. So those are obviously in jeopardy. I think financial advisors have to look at their value proposition. And just to make things worse, by the way, in the middle of this pandemic, the regulator in India has come up with new regulation, which was a long time coming, but they finally put it in place, that you can basically have two types of licenses. You can either be a distributor, and as of 1 October, I think today, you have to call yourself a distributor, or you can be an investment advisor, a registered investment advisor, an RIA, in which case you can charge a fee, but you cannot take a single penny of commission. And you can't be both. Until now, the last few years, you could be both. But as of today, I think, or whatever, whenever it's coming to effect, I think there might be a grandfathering sort of provision. But anyway, the point is, you can't provide the client both services, which you could until now. So all of a sudden, even the CFPs, the advisors who are well-meaning, want to be a fee-paying, fee-only advisor, they cannot pull off a business which is full fee-only because they've not had that transition. So that's tough. That's tough because they now have to go back to an investment-tied commission system distribution, which I think I think it sort of is a, I think they have a PR problem in that, do you tell the investors, are we investment advisors because we charge related to your investments, or are we your financial coach? Now, in the B2C side, the Money Hunt side, I believe because there's not enough advisors to go around, and also because not everyone can afford to pay the fees. I think personal finance is like health. I think there should be gyms. Like you have gyms and you can go and help yourself, or nutrition advice, you should be able to help yourself. Some people will graduate to getting personal trainers, right? But that's still looking after yourself. And then if you have a problem, then you go to your GP. And then if you have a real problem, you go to your specialist, right? Similarly in finance, I think the reason I've stepped up my financial education is because I think that we have to get the financial education out to the public and say, here are things you can do by yourself. Do not rely on anyone telling you that they can beat the market. They can't. You cannot get better information or analyze better. The only thing you can do better is behave better, which is basically act normally, act average when the whole world is falling apart. Didn't Napoleon say that? So acting average when the whole world is falling apart. That's what we need to teach as an industry. I want us to focus and double our efforts to make sure financial education is available to everyone. I believe that is not cannibalizing the advice market. I think if they are better informed and better understand how markets work and the fact that crises will happen, if not a global crisis, something will happen in your life. I don't know of anyone who's gone through life completely without a hiccup, right? So fact is, something is bound to happen that you did not expect, cannot plan for. So you need to kind of understand to be, as Taleb called it, not just resilient, but anti-fragile. I think we as an industry have to go out and educate that. And then we can sort of say, okay, and now if you are in trouble or the world is in trouble, come and speak to us specialists and we can hold your hand and do other things. But I think it's sad that we've tied our value proposition. The finance industry has tied it to investment returns, which are increasingly going to be very low. So I think we have a real problem on our hands. And in India, like I said, it just got worse. So that's tough.
Just as a little side note, what we've found is clients who describe themselves as knowledgeable are actually more likely to provide referrals to their advisor. So they see that as a very positive thing.
And Julie, don't you think that if you have clients with higher financial education, let's say, isn't this also a challenge for the financial planners to be better, for the financial service providers to be better as well? Because one thing is you speaking to someone that has no knowledge at all of financial planning. So whatever you say, even if it's very, very basic, may impress your client. But when we are speaking about clients that are much more educated in terms of their financial needs, it's also challenging for the financial industry.
Yeah, I mean, I think we're seeing the need to up our game in a couple of areas. One is technical expertise. I mean, for those of us who've been around the industry a long time, you've seen the need for designations and specialization, and we've definitely seen that in the research as well, the value placed on that. Now, I would argue that clients don't understand most designations, and we've got some work still to do to help them to understand the true value of that. And that's one side. So the being a true expert, absolutely critical. But the other side is really, and I think both Hansi and Chris have sort of alluded to this, is more the behavioral side. And that's more than ever where I think advisors need to up their game. Like you said, nobody expected this. And the skills that are being called upon right now are as much, if not more, about helping clients to manage emotion and to think forward and to understand their lives as anything else. It's a health and economic crisis, and we can't, and that's the fundamental difference here from even 2008, right? It creates a different need. So I know there's a lot of focus on behavioral finance right now. I'm thrilled to see that. And I think planners have always believed in that, but now I think it's becoming more broad-based.
Yeah, I wanted to chime in and say thank you very much for saying that. I mean, you are exactly right? It's the behavioral finance part of it, because I think I remember there was a study done by Professor Bernazzi from UCLA many years ago, and in that study it showed that financial literacy and financial education does not change behavior, right? So the head understands, but the heart cannot understand. The greatest distance on this earth is the distance between the head and the heart. And as financial advisors, I think we've increased financial education. Yes, we need to up our game, especially in the knowledge side. But I think we also need to up our game to help our clients connect the head and the heart so that they actually take action and they take the correct action, whether the markets are up or down. Yeah, so I think as financial advisors, that is something that we need to realize. It's not just the knowledge that we impart to our clients. It is also the wisdom, and the wisdom comes from experience, and that's our job. And our job is the most important in times like this, not in peacetime, but in times like this.
Well, and even going back to leadership, I've always believed that one of the most important qualities of a leader is asking better questions, not necessarily having all the answers. And that's where I see advisors really coming to the fore. But I mean, that's an interesting point, Hansi. When you're looking at education, is it both, is that how you define it, both of those things?
Yeah, so just on that point, one, you're right, behavioral finance has been topical for quite a few years. But until very recently, it's been, here's a list of biases that we all see. And if I tell you about them, somehow we expect you to act differently. So to Chris's point, that does not happen, okay? So that's what the research says, that even knowing about our biases does not mean that we can do something about it.
Yeah, you just
and it's not just,
it does.
You just label, exactly, yeah. Also, advisors experience the same biases. Also, fund managers experience the same biases. Okay, so let's not kid ourselves. There's nothing wrong with investors out there. Okay, we as humans are normal. I think textbooks thought we were econs, but we just figured out we're humans. Okay, so all the last 20 years that I've been exposed to behavioral finance was simply listing out these flaws. Now that we've discovered, no, this is normal. What we need to do now, Chris, to your point, is we need to design our products and services, and most importantly, communication around that, which we've only just started doing. So even when I was a consultant with Mercer, I was called in for a pension fund in Australia where my job was to present the investment options, of which there were many, in such a way that people pick the right option. So in a way, I was trying to, I shouldn't say manipulate, but in a way guide them to picking the right option. Same thing when I was advising India's pension system. We designed a thing called auto choice. So we said, okay, you will have 3 investment options, completely equities, completely government bonds, and completely corporate bonds. But if you don't know what you're doing, all you tell us is your date of birth, and we will give you an auto choice where it will change the asset allocation automatically, so you don't have to do anything. So I think we are only just seeing the beginning of that, of designing products, services, and communication around behavioral finance.
Yeah.
So that's my first point. To your point, Julie, on financial education, again, so Chris said that financial education doesn't work. And I know of meta studies that have looked at 50 other studies that say financial education doesn't work. Now, I understand that, but the risk of publicizing that too much is that people conclude, therefore, let's not spend any time in financial education. Okay, if regulators and policymakers and everybody else come to the conclusion that we should not therefore spend money on financial education, I think that's a risk. One, because I believe, this is just my view, I'm not a PhD in this, but I believe that all the financial education studies weren't designed properly. They weren't even designed by education people. I mean, if you believe that education is a science, and I've been studying about neuroscience, about psychology, and about education science, there is such a thing. And if there's such a thing, and none of these people ever did anything like that, they simply stood at the front of the room, used a boring whiteboard, and try to say, okay, I've told you this about markets. Now, surely you are educated. Now, that obviously does not work, okay? The minute people walk out the room, they'll forget it. So obviously, if you do education like that, it does not work. I think we should look at better ways of doing education. My website, for example, the Money Hunts, if you go on the front page, I've actually said, let's make learning about money fun. Okay, and the number of people that have told me, oh, no, money is serious. You have to wear a blue suit and you have to look the part and you have to do this. And I'm sitting there saying, guys, you take yourself way too seriously. I want to be a comedian. I think humor has more chance of actually getting through to someone. I think if I did a show using reverse psychology, how to ruin your life, I think I have better chance of getting the point across. So what I'm saying is, I think we need to keep looking for better ways of doing financial education. I use a combination of behavioral finance, mental accounting concepts, and visual and drawing. So drawing stick figures and color coding, and a lot of different things I've combined into making my workshops more fun. And I can tell you that I've presented in front of 5,000 women who save 100 rupees a month. Okay, that one I admit didn't go down that well because I was struggling to speak the language. But most of the other ones that I do, people come out raving because they say, that was fun. Not like, oh my God, finance is boring. Because especially women have this tendency, right? Because when you ask them, when they ask me, what do you do when I say I work in finance? They say, oh, you must be good with numbers. I don't have a head for numbers. I'm so bad at this. And it's like, no, you're not. You actually know as much as a typical guy. Okay, most men I meet insist on not saying things like that, but then proceeding to tell me what is happening with the market. And the more they talk, the more it tells me they don't know what's going on with the market, right? Because nobody does, right? But women have the self-confidence issue. So back to your point, I think we need to kind of do more education about what is knowable, whether it's about the market or whether it's about goal planning or whether it's about whatever. And we don't know what we don't know. So hence, when I say to you, plan for emergencies, save 30% of your income, put it aside, it does not mean that just because you think you've saved for X goal, you're fine. I don't know what disaster is about to come. Therefore, when I say to you, just live frugally. So I spend a lot of time in my education on not just the finance part, but I ask them about what makes you happy. Simple, let's go back to basics. What makes you happy? All the research that I've ever read says that the three things that make most people happy, one is health, which we take for granted and which has now been questioned during the pandemic, okay? So health. I know so many people who have lost between 10 and 20 kilos in the last 6 months because they've all of a sudden realized that their comorbidities will have an effect. So health. Second, deep relationships. So time with family and friends is extremely important. And sometimes in the rush to earn money, they forget about spending time with their loved ones. So I think that one is something that I kind of want to remind them of. And third is meaningful work, purpose. And that's, again, something that they need to be reminded and need to be kind of shown on how to sort of contribute so that they feel better. I think chasing after the nth 0.5% or 1% of return is not going to make them feel better anyway. The point is, all of this stuff.
Hansi,
sorry
to interrupt you, but in the interest of time to have another round. Christopher, I think that Hansi, Chris, touched base in such an interesting point of financial behavior of clients need more than just return. And this point of being happy, but being happy also implies in having the correct proceeds to do that, because of course that we know that money doesn't bring happiness, but on the other hand, lack of money, especially in the let's say in the third phase of our lives, when we are in this retirement phase, can make you very unhappy because, of course, you don't have the resources to do what makes you happy. And we also know that oftentimes people want immediate gains, which is exactly at this age, at this when you are elderly, when you are not generating income anymore. It's something that it's not so easy. How you combine this point of them wanting to have income, but be in a phase that they cannot take so much risk, and also to convince them that they, even though because they are in a phase of consuming their wealth and not producing necessarily as well, they are even more in need of a good financial planning.
Yeah, thanks very much for that question, Anna. I know time is catching up, so I'll try and keep this short. I think it's about bucketing the client's money. Yeah, because if the client comes with $1 million and they want money immediately, of course, the safest way is to put them all into cash. But the downside of cash is that it might not last them their entire life expectancy. But if you put too much into the equities market, then like you say, they don't like the risk. So what we should do is to actually look at clients' money and bucket them into different buckets that they need at different phases in their lives. This is just one way. This is not the only way. So monies that they need in the immediate 5 years should be in cash. Monies that they need in 5 years' time, they can have a bit more bonds and predator equities, and monies that they need in 10 years, 15 years' time can have increasing exposure to equities. Yeah, so that's how they can, in the short term, be able to have their income, not take too much risk because it's mainly in cash, but yet have some part of money invested into higher risk instrument, but may need more time. That's how actually we do it. And I like what you say just now, Anna, when you say that having money may not make us happy, but not having it will make us very unhappy. And it is right, because at the end of the day, money is not a goal. Money is just an enabler, right? And as financial advisors, financial planners, I think it is our job to help clients understand that part of the equation, that money is not a goal, but money is just an enabler to that goal. And I'm going to stop here and let the other panelists chime in as well if they have.
Julie, in relation to this crisis situation, we see many companies and people, let's say, suffering a lot exactly because they didn't have a financial support for this period of crisis. How do you see the role of financial advisors after so many people going into this crisis and seeing how important it is to have a financial reserve?
Well, I mean, I think that, picking up on Chris's point, that the last 6 months has been a living, breathing example of what can happen if we don't follow this advice. And so I think that, the role of financial advisors may change. It may increase the need to do all of the things that we've been talking about around being a true coach, helping people navigate. I think Hansie's point, though, is also well taken, that there's a large segment of the population who won't be working with a financial advisor, and that we need to provide them with the education as well. We're talking about the vast majority of the world in that bucket, right? So, I think we have to, as a society, look at different ways of supporting everyone, but financial advisors themselves, I think it's going to change the conversations. It's going to change the skill sets they need to have. It's going to force them in many ways to demonstrate leadership. At the same time, I think there will be a lot of almost tactical changes in the way businesses need to run. And we've certainly been encouraging advisors to be talking directly to their clients, gathering feedback, gathering input, on how the overall client experience will need to evolve, because assumption isn't a profiling tool, right? We can't just decide what it's going to look like. We need to understand from clients, how often will they need to meet? How do they want to meet? Do they want others involved? What level of education do they feel they need? How are their needs changing, their challenges? All of this is evolving daily. And so I at the same time as the fundamental role of the advisor may need to shift, I also think the way they run their businesses will need to change as well.
Thank you. Hansi, you mentioned, you start mentioning about women and finance. How do you see that women decide, the decision of women, how it's different from men's decision from what you see in terms of of financial investments and also the impact of those investments now during this pandemic period?
As I was starting to say, I think women tend to be less confident. They might have the same ability, same knowledge level as men, but they start off saying we're not as confident. Although there are reports from other developed markets that a fellow CFA does the study, she doesn't believe that, but my experience has been that. During the pandemic, they have lost more jobs in India, and they are more worried about losing jobs. They're also having to do more than their fair share of the work at home when there's no support as well. So I think overall, women have it tougher all around, whether it's earning less money, doing more housework, being less confident, not being able to access advice, not being talked to, even when they're relatively well off. And these are friends of mine who are private bankers even. They say even when they walk in as a couple, which is very rare anyway, they end up talking to the men because women just sit there passively. So I think generally, women need to be addressed. So I'm trying to do my bit by making I'm actually recording another program right now aimed at women. But I think the industry needs to look at how they're going to address women's needs and their psychological makeup more, as they tend to worry more. And that has worked in their favor, by the way, where there was a study, 20 years ago now, by Barbara Dean called Boys Will Be Boys, where the men traded more and therefore they lost more money. Women traded less and they lost less money, but it was more because they were not as confident. So I think we do need to address it as an industry.
Very interesting, thanks. Well, we are approaching the end of our time, but before we go, I want to do around 1 minute round for each one to briefly say what is the future of financial planning after this new world started with the pandemic. Julie?
Well, I think that the future of financial planning is pretty bright, frankly. I wish it wasn't as a result of global crisis, but the reality is that has supported the need or made clear the need. I think planners are better positioned than most to help. And the other thing I'd say, and maybe just reinforce, is that and it came up earlier, as much as we need to look at clients and we need to demonstrate support and provide them with the support they need, I think that this whole crisis has exposed kind of the human underbelly, and advisors, Hansi, I think you mentioned, they're human too. And so we talk a lot about demonstrating leadership to clients, but at the same time, I hope advisors are stepping back and asking if they're ready to lead, if they've got the strength and the energy and have dealt with their own issues at the same time. Got to be kind to each other.
Thank you. Chris?
Yeah, I think, in this crisis, it has shown the need to be tech-enabled. I think the future of financial planning, I do agree with Julie that it's going to be very bright. But I think advisors need to embrace technology as what this crisis has seen. But at the same time, I think that for us to have a future, for human advisors to have a future, I think advisors need to up their game. And in this regard, advisors must realize our role in the whole entire financial advisory process, right? Because if we don't add value, then robots will take over. Yeah, but how do we then add value? How do we fight against technology? It is to be more human. And as a human advisor, we need to understand that we are not just helping clients make investment decisions. We are not just helping them make financial decisions. We are actually helping our clients make life decisions, because every one of us, we have a relationship with money. And like it or not, we make financial decisions and investment decisions with respect to our relationship with money. So I think that is the future of financial advice, human and technology working together, tech doing the processing thing, human giving that wisdom.
Very good, thank you. Hansi?
I think Chris has pretty much said exactly what I wanted to say. So I was going to say the future will be tech-enabled. I think it'll be a combination of both and not one or the other. I think, as Chris said, there will be some elements that can be served up online, and the pandemic has just encouraged everyone to do that. But that means we need more human intervention, but on more psychological sort of coaching aspects as opposed to the investment returns aspect. Therefore, I would say my conclusion is a little bit different to Chris's though. I think what therefore the industry needs to do is to see how they can de-link their remuneration from investments to their broader range of services. That would be challenge number one. The challenge number two would be how can the education, the financial education that financial planners go through, whether it's CFP or anything else, they have to be broadened. They have to change with time. I think this whole concept of sort of studying a bunch of books and then giving an exam, I mean, that doesn't work. I think there needs to be much, much broader. So that's pretty much what I would say. So I mostly agree with both Julie and Chris.
Thank you very much. I would like to thank the three of you for being such a brilliant and insightful panelists. Very good. I'm sure that we could stay here listening to you the whole day, but unfortunately, we have here a restriction in relation to time. And I'd like to thank you all for watching and wish you a happy World Financial Day. No, we'll send it back to you. Thank you.
What a great panel discussion. As Anna Claudia said, it could have gone on for a lot longer than 50 minutes. I like the concept of creating a preparation system or a set of gyms for financial planning to establish a baseline of financial literacy to support good financial decision making, but that literacy and education alone don't change behavior, which requires a competent, ethical financial planner, like a CFP professional, to coach clients to connect their head and their heart and act average when the whole world is falling apart. Love it. Speaking of love, I want to send much of it to our moderators and panelists for sharing their insights with our global audience today. And I want to send every best wish to each of you joining us for today's event, for your active participation, sending your greetings, your comments, your questions in the chat, and for all that you do for your clients each and every day. CFP professionals have risen to the challenge and are doing a tremendous job of guiding clients during this time of uncertainty and market upheaval. And for that, I say a big thank you. I'm Noel May. On behalf of Financial Planning Standards Board, thanks for tuning in to today's broadcast. Don't forget to join the conversation at #WFPD2020, and happy World Financial